A few words before we start about logic flow. This is very akin to market meta. This is very akin to everything we do every single day. Whenever we're making these decisions, they should always stem from a point of theory. Whenever you go to your charts and you're marking out your TA, you almost have to have a storyline to go with your trades. And I don't want that to sound a storyline as if, you know, it's this abstract thing or something about news or fundamental analysis. It's not. You kind of have to have the logic flow and it to be a continuation of that story. Like you're constantly refining what it is. Like an example of that would be right now we have daily to daily. It hasn't hard closed. So the story right now is it's trying to accumulate past a daily candle. So, a daily trend. So the logic flow right now would dictate that this thing is going to continue to move down as long as we are still underneath the confines of this daily to daily trend. We don't have that hard close. It's been following this trend religiously. It still is. It is trying to accumulate against stronger trends. So you have a daily trend trying to accumulate. And I believe this is now another daily trend from here to here, but in existence for much longer. So you have one daily trend fighting a weekly trend. I have this marked as weekly. I just want to double check, make sure I don't have this marked. Yeah, so this is daily to daily, but it comes from the weekly point. I've left this one purple because it's so large. So kind of the, when I say story, that's kind of what you're thinking about right now. Like, oh, this is a story. It's the logic flow of the chart right now is that there's a daily trend that's been compressing it. So if this is to hold, this daily trend has to break to at least create some type of accumulation cycle. And the next accumulation cycle isn't even confirmed until you start to break over the valley that got you there, which would be this, which is some origin level that are, you know, some level that originated from back here, some test of this that created a valley origin inside of here. So I'm just going to hold control and kind of do this like this, assumingly, you know, without going through time frames, this is the origin level. So if we were to accumulate, we would have to break this daily trend first, create the first real daily trend and the first real trend work up top that will stop this decompression of the move. And then maybe we can go up. So that would be like what I mean when I say you have to have this story that follows throughout your trading. You have to have this idea of what's going to happen next based on the meta events of what's happening, the overall market meta. Right? So this is really important to realize when we're talking about logic flow that you have to kind of follow a story. I talk a bit about the podcast that's being released today. I talk a bit about this on the podcast. When you have a story, and this is like a really critical tip or something that's really important. Whenever you're trading, okay, there's almost this like deviation factor that I use that I don't really talk about too often. There's almost like this deviation factor where I outline all the possibilities of a move. So I can kind of predict the move one by one by one. I can kind of see everything that's happening. So if I were to do that right now, I would say, okay, well, you've got a range trend here. This dictates the possible origin level for the future somewhere in here by being hit. Wait, no, there's no origin. We can't do that. So there's no origin. Rather, it's just a range trend. Well, does that range trend have any reverse levels? That reverse was hit. Which would just bring it to actually this level right here, which furthers the trail to right here. So this is kind of like the level that you would expect to get hit. So this is like kind of what I would expect to get hit. So I would expect to break this trend, go up, hit this level, and there would be a lot of other things that have to happen too. Like I would expect it to break this trend, go over top of this one, somewhat come to here, pull back, create that origin, hope to hold a cycle, blah, 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 until the end of time where you get to this level to see if, hey, are you just creating this as the long-term kind of this equalized trend, right? Like kind of like an equalized trend, how this has been in birth for so long. Could this be the start of that, the birth of that, the birth of the long-term distribution? So that's one component that I was thinking about. Like I'm creating a story here. When you deviate, now here's where it gets interesting. When you deviate away from the possibilities, that's when you have a very clear understanding of what will happen next, because what we're doing is we're constantly kind of using logic to draw a story, right? Like you hit this trend is supposed to support it. It has been in existence for a long time. It has been all the way from down here, the daily to daily candle. This is supposed to support the trend. And if it does, the story is that it's going to keep moving up and up and up. Once it deviates away from this, it means that all other possibilities have collapsed. So you have these kind of points in your logic flow where you can like almost one-to-one predict what's happening. Like just like I did in that last Future of Trading on episode 9 there, the Future of Trading Remastered, where I predicted the trend before it was going to happen that would further allow the constant distribution of, and I don't know if everybody has seen that, so I'm going to pull it up real quick because it kind of helps to understand what I'm talking about here. Let's go here, Future of Trading lesson 9. So because I know a lot of people haven't watched this yet because they are trying to catch up. They're wanting the whole Future of Trading remastered to be released at once, which happens today. To the Future of Data. The final one comes out today. And if so in this origin level, okay, well, what about on the daily? Do we have anything else on the daily that doesn't create an origin level? Let's just here we go. In this lesson, I had created a story. I had kind of plotted out what I was expecting to happen back up at 50K. So I drew this trend work before it happened. So if anybody has seen this, they would know that I kind of like did the impossible here, drew the trend before it was going to happen based on logical assessment of what could happen. Oh, here, let's go watch this right here. So maybe in the future, you can kind of do something like this, break that trend. It has this kind of false move, goes like this, moves down, breaks that trend. And then you have, look at this, ladder point to ta-da, ladder. So this was on the daily and it was, I marked it at 51,406. And so I had predicted, so for anybody who hasn't seen this, I had predicted the perfect trend. Basically, I had predicted it to go like this. The replayer tool here. From this point, I had predicted it to go, I believe it was to this trend here, like 51,406 was the price, 51,400. So back in this moment, I said that we were going to create a trend here. So this is the story that I had created. Okay, this was the story that I had created in this lesson before it had happened. And then it did that. It did exactly what I said it was going to do. It went up to this part of the move, created the trend. That trend held the move down and it moved down, just like I had kind of summarized here. Like this is what it's going to do. And the second you break away from that expectation, there's almost like this deviation factor that you have to be aware of. There's almost this, you can create the perfect story, and as long as your technicals are accurate, it will like come to fruition 10 out of 10 times, right? Or like 99 out of 100 times. It'll come to fruition. Like this is exactly what you're supposed to do. You're supposed to take the logical informations of your chart. You're supposed to create those pieces that are supposed to happen next. But the interesting part and the interesting thing what happens is when it deviates away from that, it has kind of broken a chain of larger events of what is supposed to happen. So whenever you're trading, you kind of have to look at things in deviations to see where, like, you could call it market reversals. You could call it breakout points. You could call it the breaking of origin levels. There could be a lot of names you could give this, but the simple fact is that there's a very predictable way that we can see the charts. And then there's kind of this hidden deviation factor that we have to see, so that when something deviates away from what we're expecting, you know that all other possibilities are now no longer available. So like an example would be like this. If we expected it to go here, let's redraw this. So we had a trend like this, and I said, okay, it's going to break up to here. It's going to go to this level in here. I marked it somewhere around here. It's going to go there. It's going to create a trend, and we can go back to that. And then it's going to fall down on this side, right? So that was kind of like what the idea was. And then saying this is what's going to happen, and then it's then thereafter going to move down. So let's walk through this. The move happens perfectly. Now we know we have our first trend. The exact kind of trend that I had created here is exactly what you get, 51,046. Okay, so that's what it was, 51,046. 51,046, something like this. We say we have a trend here, and something like this. So it creates a trend here. I believe it was like kind of like something like that. 51,046 was the price. Okay, so I used the level to justify the price. Okay, so that's fine. We can just rewind it to 51,046. That's close enough. I can't replicate it perfectly because I'm using a different part of the charts. So anyways, we would now expect the charts to go like this, to create a trend on this bottom side, to fail that trend, and to break down. All of a sudden, if it holds this trend, it's a deviation away from what this represents. So we kind of draw out this story, and you look at this lesson here, and I said, okay, it's going to hit that, and then it's going to break this trend, and then it's going to sink to the floor. The second it holds this trend, it deviates away from this. So you have to build this logical flow of information. You do this when you're scalping. You do this when you're swing trading. You do this when you're position trading. You do this when you're doing your TA. You have these expected things that are like, okay, well, this is going to happen. We already know that, which gives us great trade information. But this is supposed to break this trend down. The second it starts holding this, it's deviating away from what this represents. So you almost have to look at things in a way where you create a story, a logical flow of things that will be musts. So for example, in this one, if we were to delete all these drawings, this one, we would say, okay, well, if it hits this level like it did and creates the trend, which it did, then it must at a minimum go down to this trend. And it will break this trend because this is laddering the bigger time frame, which is superseded up here. So you have a bigger time frame laddering this move down. So this will break this trend and it will move down. The logic flow in the story makes sense. It's all one-to-one exactly what it should be. All of a sudden, if this starts holding, it's almost deviating the entirety of this dump because it's deviating away from this. So then what would happen? So your move would go like this. Oh, all of a sudden it's holding here and it's laddering up. It's deviating away from what this represents. Now, what your expected result would be like, okay, at a minimum, we have to hit this backside, and the backside represents the breaking down of this move even further. We have to hit the front side of this move, which means the front side hold to see if it can actually move through its level, and then you have like the break of it. So you'd have like three components of this. So if it held this trend, you know it's deviating away from this. So you have like one of three expectancies. You have backside, you have front side, you have break level. So then if it comes up here to the backside, you know it's going to hold the move down. So your expected result would be like that. Like you're just holding the move down. It's going to indefinitely move down. If all of a sudden you hit the backside and continue to hold this trend, it's deviating away from what this is telling you on your charts. So you have to look at things almost like in a reduction manner. A logic or a flow of logic will create expectations, and the only expectation that you have is what the level can tell you. So like a backside can tell you it's holding the move long term. If it deviates away from holding it long term, it means it's no longer going to be able to hold the move. So you have to look at things in almost like a deviation factor. You create a logical flow of information that's supposed to happen. And once it deviates away from that plan, once it deviates away from what's possible is the more accurate way to put it. When it deviates away from what's possible, then that means the level is failing, right? Or the move is failing. Front side here would represent it's going to go and try to have to hold this over time, right? If it has to hold the front side over time, that means, okay, it holds it over time like this. That's showing you that the move may be breaking because you could be laddering from here to here to here. So you're creating like an expected logic flow. If all of a sudden, instead, it hits this one time and moves down and creates a new backside, it has deviated away from trying to break this level. So you could be somewhere in the middle of this move like this. You go up to this front side level, you come down instantly, you create this little thing like this, backside level here, you go like this. All of a sudden, this has deviated away from this trying to break the move, the front side being like, oh, it's kind of the final hold level. It's the part of the move that would be the final hold level. So it is deviating away from what the technical is telling you. So that's how you have to look at logic flow. You almost have to build out a story and then look at like deviation factors where things are not completing what they're set out to do. It will help you analyze moves in the future, like how I did here. It will help you analyze moves in the future once you get layers and layers and layers deep, help you predict, like predictive charting, being able to see comparative analysis, predictive charting, where you can say, oh, I know it's going to this level because of reason X. And if it holds that level and does this, then it has to move down. So then it gives you very like precise and like a high level of precision when you say, oh, it has to hold this trend because of reason X. When you understand logic flow, you'll understand where this trend has to hold or it equals a big dump, right? And then look what happened after. So this was like our prediction. that it would go create this trend and then rip down right after, like way to the ground when we had drawn this out, and then like look what happens after, right? Because there was no deviate. There's nothing for it to deviate here. Like it's the expected result. It has to do this. There's almost like a zero-sum game being played here where it must create this ladder point. And if it holds this ladder point, it has a very specific result. And there's nothing else there because it hasn't deviated away from any of its kind of logical planning. Okay, let's get to this. I'm looking at this right now, and from a high time frame, how am I making my assessment? So this is kind of logic flow that I'm doing right now. So let's say we were right here in the moment, right? At first, I would mark this level to say, oh, this is completely unencumbered. There's nothing there. It's, you know, it looks like a great test. I'm also aware that we have a lot of smaller time frames in here, and there's a candle that goes through it. Really so I know there's some kind of hopefully interplay in there. There's some type of I've been playing with the Vimeo settings to try to help it breaks and all these things. So I just need to be aware of it. So this move is happening, and voila, we hit a level. So I already knew that there's some kind of interplay in between here. There's some type of movement up and down on different time frames. It's creating pseudo holds and all these things. So I simply go to my next time frame, and I would have had this level here, which is the 12-hour, completely unencumbered, not really tested or touched by anything. So I'm just going to quickly pause this for a second, and we have, because I want people to have this in their mind, we have the leak finding session on Wednesday. So if you remember the last leak finding session, and we did like a live trading session, which we're going to continue doing next month again. If you remember back to that live session and the leak finding session was amazing. But the live trading session, like there was this crazy trade I started the day with, which was on a 3-minute reverse level, but it was logic flow that helped me find that trade. So this is going to be a big focus this week in our leak finding session, is that there's going to be an emphasis on, I want to see everybody who's participating in that leak finding session. I want to see an emphasis on thinking moves out logically through possibilities. So we're getting more into a comparative analysis take now. We're getting into like the more accurate nuances of day trading, not just technical analysis anymore, but like kind of the true reasons and the true pieces that actually create comparative analysis when we are comparing moves and like the higher level stuff like butterfly effect. So there's going to be a big emphasis this week on logic flow. So just really today's lesson is really important. This one's pretty clear. It's not like the daily. Like you can see the difference here is that you have a daily candle here, okay? And this is fine. This is a great hold level, and this can hold it long term, but you're looking for more of the knife catches. When you see this candle going through it like this, you know there's some type of action that's happening in that candle somewhere. You don't simply just go over top of it. It's not completely unbreached by anything. It has something that goes right through it. So automatically we can say, okay, we're on the daily. There's going to be something on a lower time frame now. So before we move through here, what would be some things that you could observe? So let's start thinking outside of the box a little bit. What are some things that you could observe about this move without moving through time frames? So on your screen right now, where we're highlighting, what are some not on the charts at the moment, but hidden observations that you could make on this chart? Let's see how far you guys can take this. Hidden observations, things that we can't see, but we have a good inclination that they're there or know are there. And then what are some of the things we can see? Let's try to name out all the possibilities of what we could see on this chart. Broken local trend. So you're talking about like this, Luke? We can see that, sure, that's there. Yep, broken local trend right here. Reverse at 9,800. So up here, reverse at 9,800. I would be looking more at an origin here due to the fact that this had touched this candle right here, had touched there, and then it wicked slightly above it. I'm assuming there's an origin in here, but to start, you're right, we could put like a 9,800 reverse level, and then with the understanding that this is probably an origin right here, just because of what this candle pattern looks like. Ladder at the top is what we can see. Yep, there's a ladder. So is there a ladder from a hold level, or do we have an origin breakout point? Is the ladder even important now that we have an origin point? Lower time frame holding down the move, possible. Ranges and trends on both sides, create a backside level, and then you have a front side origin, gain information based off what's happening. You're trying to form a daily trend, backside daily at 9,200. Okay. What about just off of right here? Just off of what we can see in here. It's moving down. So if we were to assess this in terms of what's in here, what can we not see but we know is kind of there, or that we can presume is there? Just in here. What do we see in here? Without seeing it, what do we see? Front side hold is there, yeah. What else is here? What else do you possibly have in here? Let's try to work with accuracy. So try to name only the most important things that you can't see that you think are happening. Polarity. Polarity where, Matt? Where's the polarity? Ladder point. Ladder point off of, I'm assuming you're thinking this, Triple Sam. Final hold. Already tested from back around 8,600. Okay. Break level. Good one, Matt. That's one thing we can see that's like very, very clear for us. Very dictative. What about the break level? Emphasize more on this, guys. I want you guys to be calculated. I want you guys to be thinking 10 steps ahead. This is something I do so well in life, is being a calculated human being, always thinking 10 steps ahead. Work off that break level. Joe said break level? Son of a... Wait, let me see. Tackle break level, you did. Okay, good. 2 people got it. What else? What else could you guys calculate off of this? We're getting somewhere with this break level. So Joe said that as well. Good. It's inversing either Pandora's box or breakdown. We might create an origin here. Okay, why would we create an origin here? We haven't even attacked it once. How could it create an origin here? You can break the break level and still move up because of the hold below. Origin around 8,600. Yeah, so you could create an origin here. This is true. So what does this mean? If we have a break level, isn't it supposed to break the move? So now we're kind of at this impasse. We've kind of got conflicting results, don't we? We have a break level that's apparently supposed to break the move. So how could you calculate this one step further? Because now you're at an impasse saying we've got a break level, but we also have potentially the creation of an origin. So which is it? If it's supposed to break the move, shouldn't we be trading it because it's breaking the move? It has to hard close the break level. Okay. So if it hard closes the break level, is it in one candle? Does it happen over time? What else? Can we see anything in these 2 candles? Is there anything we can glean from this here? I think we've gotten what we need out of this break level. I think there's more to be talked about there, but can we glean anything off of this? Can we glean anything off of this? What else can we take away here from this? So I think Kartik said it. Origin right here. We could potentially be in an origin situation. So we have to look at this break level and say, okay, well, we could possibly be creating a break there, a range there. What about this? Okay, we could possibly have an origin level here. Where would the first wick be that could have created this origin level? So we're kind of creating a trail here, right? Okay, this could be an origin level right here. It looks like this attacks something. Where's the hold level in here? So that's what I would say. I would now say, okay, so this move moved up. It laddered off of something in here and created like whatever little move right here. Could there be like a 1 hour origin right here? Like this, right? Could this be like a 1 hour origin right here? I would look at that. So where this is and this is, could be a break level from back here, which will be important because we need to know what time frame created it. So that would be kind of the first thing I would start to calculate further than, hey, we have a break level. This could possibly create an origin. So Kartik had a good assessment here, but maybe missed, or maybe he didn't, because he said around 8,600. This could be the break level right here, which will be valuable information, because now we take this one step further. We create a level right here, right? So you have a level here, and then you may have a hold down here. Now you may get into the question of, okay, well, what's going to break this move? Well, if you hard close under this daily, what if you hard close under this daily, but don't hard close what could possibly be the origin level here? So now you have to start thinking about this like, oh, you possibly have a range that started here, like the testing of a range or the creation of some kind of range that started here, right? Where it's like, okay, well, you have, this was the point or the controller of the move that is actually controlling what is important in this move, right? Like you have the origin, the test of a level right here, possibly. We can't see that obviously because we don't have time frames, but that's not important for this. What's important is being calculated in our logical flow of this move. So then you say here, sit here and you say, okay, yeah, so you have a move right here. That's the origin. So now we take this, like I was explaining, one step further, like calculate the possibilities. Okay, so this is how my brain is seeing this. Okay, we've got a test right here. Possible candidate for an origin level. You break above, or in this case, below the level, and you hard close above it. So that would be the candidation for an origin level being created. This retests it to confirm that it's the level holding it. Okay, good. Now, when we come down to this level, we can hard close under here, as long as we don't hard close kind of this right here. So what I could see happening is I could see you come down, you test this. You don't take your position on the origin in this trade. You take your position on what could take this interior range, go down and test a hold level that would be within respect to coming back over top of this origin point right here. So you can go below this, we're going to call it like 8450. You can go below 8450, dive down to a hold level, ladder off of this to create the trend that will represent if this origin can break or not, come back over top of that origin without hard closing the relevant time frame. Now there's two time frames that could possibly be in play here, getting into a deeper material. There's the daily time frame. So this might indeed be a 15-minute origin level. So you might hard close, break that origin 15, but still be within the confines of what could hold this up on the daily, which means it will attempt. Now I just want everybody to understand this. You have the origin level, it hard closes on the 15. It attempts to break the move down. What could hold this up is this level right here. So now you're getting into like active level stuff, which I won't go into today, but you're getting into like active levels. So now you could have the origin 15. The origin 15 breaks down. It's still not hard closing the daily, but it has hard closed the controller of the move, being the origin 15. However, the daily is still in play. So if the daily is still in play, could we not just ladder down, use that 15-minute breakdown of that origin level to create a ladder from here to here? So could you not deep dive the origin level, hard close it on its time frame, use that to stabilize the creation of this move while not hard closing the daily? So see, you've worked with two time frames now. So you've had like kind of this connectivity of a lower time frame being what's actually holding up the move, but the lower time frame also has to respect the higher time frame constraint. So you could hard close this origin level. Oh, you guys don't see the mouse? Okay. So you could, here, let me make sure my screen is on the other side so I can see here. Okay. So you could indeed, I think it's pretty self-explanatory. So I'm just going to redraw the mouse as I'm talking, but I think it's pretty self-explanatory. So you could indeed go and hard close this origin level over here. And then you could deep dive that, because that could be the fuel that the move needs to say, oh, the origin move is dumping. Wait a second, you still have this active daily. Your daily is still in play. So could you not hard close what looks like the origin? The move is entirely lost. Use that to deep dive to create the range trend here that would be what is actually holding this move up. So over the course of a day, could you not go way down and be like, it's just barely holding on the last couple strings of a second, and vroom, rips right up. Therefore, yes, it did close the origin. That is supposed to be the controller of the move. but there's still an active level in play, or there's still a level in play. Again, we're not going to get into active levels. We're just going to get into levels. So then you would have exactly, then it would polarize the move. Exactly, Starlight. Then it would polarize the move because this origin would be broken. And then you'd have the polarization point being the hold levels and not kind of this combination of levels. So now you could have an origin move right here. You could have what this origin level is. Go down, go break its level. That is fuel for the move to go and ladder off this, or possibly even hit this hold level down here. But it still comes up to create some kind of range, which could represent this still holding the move. It's a daily time frame. That's a long time in Bitcoin, like a daily time frame. There's a lot that can happen in one day on Bitcoin, as we know. So there is no reason why this origin level couldn't close out. It dumps the move down. It uses this point to create a ladder, right? Or it creates a ladder off of this hold level. It comes all the way down to this hold level here and creates like a little ladder like that. Now, therefore, giving you a trend that can hold you up as well as a level. So then you could get over top of the level. The level can hold you up, or the trend can too now. So there's a really important understanding and too much of a tunnel vision generally in technical analysis towards one moment, because why couldn't the daily hold it up here? Well, if we're not hard closing the daily, why couldn't that hold it up? Well, if we are hard closing the daily, how come all of a sudden it didn't close? Well, why can't the origin point hold it up? So why can't they work in combination together to say, oh, you just hard close the daily? Well, but guess what? You kind of didn't really hard close the 15 origin. So how come you can't, why can't you hit the break level and hard close the daily? Do all of these things that tells you this is moving down, and it goes down in ladders and spikes back up over top because it didn't hard close the origin point. So why couldn't it do that? Because you always run into this question. I always run into this question with people. I always run into this, oh, I saw the origin move. And then I have to tell people, I look at the chart and I'm like, oh, but what about the hold level? Or the exact opposite. They say, oh, this broke the hold level. And I'm looking at this chart and I'm looking and I'm seeing all these wicks touching the same point. And I'm like, oh, what about the origin? So then there's always this general confusion about what's actually holding a move up. Well, why can't it be both? Why can't you have 2 or 3 criteria on your chart that could possibly hold a move up? Well, now you get into some interesting results in the charts, because now you get into, oh, it moved down, hit this hold level, hit the break level down here. Yeah, great, which is actually the origin point. So it hit the break level. Technically, it should be moving down. Starts to move down, moves back up, lingers here for 2 days straight, which I've seen. And then it's like, but cotton, we're hard closing under the daily. This should be breaking, but you're not hard closing under the origin point. At that point, you've now created a trend. You've now created a trend that you need to use. Oh, well, now we've broken the origin point. Well, why can't it be the trend now? So you often get into this thing where people are kind of chasing their tail in a circle, where it's like, oh, they look at one thing and one thing only. They have this funny way, but by no fault of their own, because this is the way we've been trained. We're trained to look for break levels. We're trained to look for hard closes. We're trained to look for ladder points. We're trained to look for trends. And this is all the stuff you need to be trained to do. But you also need to understand that there are combining criteria. If you hit how many times have you looked at a chart where it's broken a hold level? It's hard close a hold level on a daily or a 4-hour, and it's supposed to dump, but it doesn't. And it's like, oh, I guess I missed this. No, you didn't miss it. You just didn't include it. So you didn't miss it. You just excluded all possibilities. So this is critical information, critical to understand that you have to create a logic flow that allows you to see all stories. And then when there's a deviation away from that, and then you go back to what we were talking about with deviations. And it's like, okay, what can we see? What can we summarize just on these few candles that could be possibilities here? So why can't one of 20 different possibilities play out? So you reduce the amount of possibilities that can play out when you start seeing more of the pieces that can hold the move together. Because right now, just looking at this chart, it's like, oh, there's only 1 or 2 possibilities, right? So it's almost like another bell curve, right? It's almost like there's another bell curve right here. And you're first starting to understand day trading. You're like, oh, there's a hold level. That's one possibility. The next one is a trend. So there's 2 possibilities in this chart. So now we've got like two possibilities, this trend to this trend. So it's like, oh, there's two possibilities. So you're down here in the learning curve. Now I need you to think about all of the possibilities. So now we need to bell curve to the top. And now I need you to take those two possibilities. And now I need you to start adding all of the other possibilities that can happen together to get this huge amount of possibilities. Okay, there's an origin point here. That origin point could create a local trend, which could have this as a global trend, right? So this could be global, that could be local, and then it could create another little one, legacy. So now you've added more possibilities. You have the origin level, that's a possibility. You have the break level, that's a possibility. You have a hold level down here on smaller timeframes, that's a possibility. So you're taking what would be a basic understanding of TA, which would be, okay, we have a hold level and a trend, right? Now you bell curve it up to add all the possibilities in there. Now you get more advanced and you bell curve back down by taking all of those possibilities that existed up here and you start combining them to say, okay, it is possible to break this move once the origin level breaks, right? So like once this origin level breaks and hard closes and the daily hard closes, then we've confirmed all levels are no longer available. We have a trend here, which has a localized trend. So if you have the origin level hard closing under with a daily hard closing under the local trend, you have one trend left. So now you have only a certain amount of possibilities based on an over encumbering amount of scenarios that could happen, an amount of levels that's all over your charts. So now instead of having hold levels and trends, you add everything into that to bell curve up. And at the top of the bell curve, you start reducing the possibilities that can happen based on combining all of these into simple theories. Okay, we have like this. I'll just do the bell curve on the screen so people can see. Bell curve looks like this, right? Like the shape of a bell, right? Shape of a bell, right? You got the dial and the dong in the middle, right? So you have one of two possibilities down here when you first start trading. Now we need to interject all of the different things that can happen here. So now you're saying, oh, there's 20 and 30 possibilities. Now what you do is instead of having possibility here, number 2, number 3, 4, 5, 6, and so forth, 20, all these different possibilities here. Now you're combining them into chunks and saying, okay, if all of these levels break, let's do it the other way. If all of these levels break, you only have certain amounts of possibilities. And if these are all your trends, and if these break, now you're left with two outcomes. So now you only have two possibilities once you start combining all these things. So this is the origin level. This is the hold level. This is the daily break. This is the smaller time frame ladder. So you're combining those to see, hey, once all these criteria have been met, well, why can't 3 of these criteria be met? Right? 3 of these criteria be met, but the 4th one holds up the move, right? That deviates away. That holds up the move. All of a sudden, it can't dump because either the daily's holding, the origin hasn't hard closed. So you have kind of this bell curve in day trading. Like I've talked about this bell curve lots in the past year. So like there's like the recycling and the bell curve of things, right? Very simple time old tales of how things are strategized on charts or like in science or any data points and how you get to like cures for viruses, how you get to the life cycle of diseases, the bell curve, right? The COVID is a perfect example of that. It starts small, ramps right up, and then it stays high, and then it has a fast decline, right? The bell curve is a time old thing. It's just the way things work. Everything happens on bell curve. Luck happens on a bell curve. Gambler's fallacy can happen on it. Like everything, like a lot of things in life happen on a bell curve. Let's just put it that way. So then why can't you start to see the overarching pieces? Where were we here? So why can't this have multiple levels that's closed, but one of them holds it up, right? Then it would be deviating away from the expected result because the daily hard close, the origin hard close, but maybe there's a small hold level here. If that small little hold level was to hold it up and that was the final level, well, can't that still be a hold level for the entirety of the move? So now you get into the question of, well, which hold level is actually holding it? Any of them can hold it as long as they don't all collapse. Well, how deep is it going to go? Well, that's another conversation. Which hold level is it going to go after? Well, that's another conversation as well. So which one is it going to go after? Well, that would be an interesting thought. And now you'd have a different process to come to that. But if 3 out of the 4 hold level criteria break and the 4th one holds it up, you're deviating away from what is supposed to be the break of a move. So all of a sudden, you're going to launch in the other direction. Pretty sure Bitcoin actually just did this right here. Hit its level, right? Tried to break its move, all of a sudden launched up It's hit trend perfectly. I don't know if I would consider this a deviation away from what was expected to happen. I would consider this it's testing its trend exactly as it's supposed to. I wouldn't consider this a deviation. We'd have to go and find those kind of deviation moments, but I don't really think that's important for right now. This is a good deviation moment where this thing should be breaking. Oh, oops, wrong tool. Is there anything before this? There's nothing before this. This should break the move down. So once you lose this origin point here, which is the higher time frame valley origin point, you'll break the move down to its next range. And that's exactly what happens. So if you were to break this down here, stabilize right here, that deviates away from what this represents. So you'd likely launch the other direction, like hardcore. You'd likely launch the other direction hardcore when something deviates away, right? Just like here, if you break a ladder point, right, you probably see a form of deviation right here. So you'd go and you'd find like the origin level would be somewhere like right here. That's the origin. Very simple to see. Creates hold levels. That's fine. Hold level, hold level. There's no deviation here. Hold level, hold level, hold level. There's no deviation here. Breaks a move, expected result, right? This is no deviation. This is actually just the story of what we had planned out. It had, oh, was it there or was it here? It was here. It doesn't matter. It was right here. This is the exact what was supposed to happen. There was no deviation away from this. So there's no reason for it to move up, right? And so when you start thinking about day trading in kind of this combined form like this, it will help clear things up a lot where you can start to see, hey, like, why did this break my level? Why did this hard close this time frame, but still launched up? You probably missed something because technically it could go after this hard close on this origin level. It could hard close the origin level, but still be stuck inside the daily constraint. It's almost like it has to break out of both boxes. Think of this as like as a magic act. This is one set of shackles on the ankles. This is another set of shackles on the wrists. You got free of the wrists, but you're still in the shark tank with the water going up to your neck, and you couldn't get the ankle ones off, or you broke it of the ankle ones, and you couldn't get the wrist ones off to unlock the box, or whatever. It's still living in the constraints of another piece of the chart. So until it actually breaks all pieces of that chart, and so maybe you unlocked your wrists and your ankles, you still got to pick up the key off the ground. So maybe this hold level down here is the key off the ground. You still got to pick up the key. You got the key, you still got to unlock the lock. So maybe the trend is now the lock, right? So then there's like a different container it lives in. So this is really important to realize when it comes to logic flow and thinking about how we ascertain moves. How can you, and I go back to what I first said, how can you be calculated? How can you be like a calculated attack on this chart? How can you take this thing 10 steps deeper? What are the layers that are there that you need to continue to see, right? But again, this is one of those things. It's like, it's total sense. Of course it could go after this origin point and break it and hard close the origin on the time frame it was created. And if it was still under the constraints of the daily, where it could technically not hard close a daily and shoot back up, well, of course, because you have a daily, that makes total sense. Now you're not even, now what are you saying to yourself? You're like, I don't even understand how to chart, because like now what I thought wasn't true. It's like, I'm looking at this origin level, you're expecting this breakout moment while you're missing the larger container in the more local part of the move, maybe, because it has to break all constraints. So now you're probably sitting there thinking like, I don't even know how to chart anymore, because this is like another level of something that I never even thought about, but it makes total sense. It's not common sense, it's total sense, which is like why I love that saying. It's total sense. Of course it could hard close the origin, but still be under the confines of the daily. So now you have to take this and take this calculated approach. Like what I said at the beginning, how calculated can you be? Like how much of just like a grinder can you be? How far can you take this? How calculated can that assessment go? Because now you can start adding multiple levels that need to hold and break. So now you could almost make a chart that looks like this and go, let's just do like a quick one. You could go, okay, 4-hour level here. Inside that, you have a break level right here, maybe, which is this one. And you have this right here. And you have that right there and blah, blah. And you could have like 5 or 6 levels. And you know that if you start hard closing here, that's the moment that this thing is done. If you hard close here and you can say, okay, this is the daily. So we're here, we broke this 1 hour, we hit the 4-hour, we broke that, we hard close the 4-hour. Looks like we're about to pump. Okay, here's the daily, last moment, one up to here. Okay, It's closing up here daily, hit a ladder point, fell back down. It's creating a local trend. And it's all still within the constraints of this. So then you can go, okay, broke this, came up here, broke above that. It's about to break out, hit this trend, closed back under this daily because it never broke that. So in order to truly break above this trend and have this real breakout up here, you'd still have to close this daily. So back in the day, maybe about a year ago, there were some people in this session. I believe it was in February last year. So there's some people here who may remember this. We were doing a trade with Bitcoin and everybody wanted to short and nobody understood that if it held the trend. And so like there's names in here that I remember, and you guys will remember this moment because this is one of the tactics that I used there. There was a session where we all did like trading and we were using our own amounts, and a lot of people were saying it was going down and down and down because Bitcoin had broken a trend. Again, this was about 11 months ago. It had broken a trend and it had started to hold over top of the trend. And I had said, okay, well, if it holds over top of this trend, it was kind of like a basic lesson almost in a way, because we were just holding over top of the trend over time. But what people weren't seeing is that, and this comes back to the longer it holds over trend, the bigger the time frames that it'll close. So the more you're holding over top of this trend, like everybody had saw this move like this. They had seen it as it went up to here, it laddered off this, it's going to move down because it was like this. Meanwhile, it had some kind of trend out here like this while it was still laddering on the backside of this trend. And everybody was saying it's going to short, it's going to short, it's going to short. And me and one other person, I was like, it's going to long. You guys are not looking at this correctly. It's going to long. So nobody understood in that moment that the longer, regardless of it going down, it was going down too slow. Because what it was doing is it was still continuing to close over this trend. So it may have been losing levels on this side, and it may have been closing underneath levels and creating hold levels here. And then it created like a 1 minute, and then it created like a 5 minute, it created a 15 minute. Things looked really bad. But what they didn't see was they didn't see that it could then, doesn't matter where it stopped, it could stabilize. And it was actually hard closing the larger time frame here. So throughout the course of the day, this is exactly what happened. It was moving down and down and down and down and down until it started to stabilize. And everybody was like, oh yeah, this is the perfect short. All of a sudden, it had started to stabilize. And it's like, okay, well, what they didn't see is they didn't see that this was actually closing high time frames, no matter how much it was moving down, no matter how many hard closes it was creating here, and no matter how many hold levels it was creating here, like no matter how many 15-minute, 1 hour hold levels. What they didn't see, because they saw that as like, okay, this is relative strength of it moving down and it has a huge set of barriers that it has to break through now. What they didn't see is it had broken a massive trend out here, and it was just sitting there like accumulating over top of this trend no matter how far it went down, unless it had broken straight down and started to close back below it on those time frames. But it wasn't. It was closing above it. And then what had happened is it had moved up, and there's like 1 or 2 people that were in that trade and they cashed big. They made big bank on that trade. I remember that trade specifically because I remember there are so many things that were untalked about in that session. And this was like maybe February or March. I'm pretty sure it was like February. So this is like kind of that same thing. It's like, what are you missing on the charts that's being shown to you on the higher time frames, regardless of what's happening, right? Because then it had created the first criteria that this could move up and attack those time frames, because those time frames are relatively small compared to the larger piece that was happening. Just like in here, this daily may be relatively small compared to this origin, because this origin existed first, but this may be relatively small compared to the trend, right? And that trend may create a local trend, which is relatively small. So you may hard close all moves, but still be under the confines of the trend. I'm going to catch up on chat here. This is where static fails. Statics fail. Makes sense. Yep. In this scenario, how is important the time frame that's created at the origin level? That's all important. The origin level could be the breakout of the trade because it closed an hour after the daily hard closed. So you could get into a scenario where this origin level is never tested once, but it's 5 o'clock at night, which is the daily close for Bitcoin, and it could daily close on Bitcoin. And then in the next 15 minutes after the Bitcoin daily confirms, in 15 minutes, so half an hour after the daily, you could also have a hard close on the origin. Alternatively, you could not hard close that at 15, and then it might take you another 24 and a half hours to confirm that, because you would have to hard close this origin and stay down in here and not move up. So this could be the difference of a 15-minute time span between 4:45 hitting to 5 o'clock or 5 o'clock to 5:15, where your daily has been created. So the daily hard close is or isn't created could be a difference of 30 minutes in either, or like a 30-minute spread, 15 minutes in either direction. You see what I mean? What did bell curves represent? Was it the likelihood that an event occurs on the charts? A bell curve represents the results in which we can expect. It doesn't represent one specific thing. Rather, a bell curve, when you use bell curves in work, like in data work, in medical work, in biology, in any sciences, the bell curve is kind of this, even with like sleeping patterns, even with like the way your brain works. We're foggy in the morning, and as the day ramps up, we get sharper. And as the day drags out, we go back down to a state of being tired. Like you're tired when you wake up, and you get your energy up and you're coffee in and you're highly active until it hits like 3 or 4 o'clock. And then you decline till it's bedtime. Like a bell curve just represents the way in which we look at things in life in terms of efficiency, in terms of life cycles. A virus, like that's why I said COVID starts small, then it has a massive insurgence fast, and then it stays at the top of that insurgence, and COVID rates are huge, and then they start to fall off sharply, right? Like that's, bell curves work in RNG generators. They work in like things as stupid as gambler's fallacy, where gambler's fallacy is just the idea that the more 50% rolls you make, the more likely you are to hit. No, every roll is independent. So in gambler's fallacy, there's this idea that the more I do this, the more I'm likely to win if I keep, no, but it really is just a static 1-to-1, 50%, 50%. You roll a dice 1 or 2, 50-50 every time, uniquely independent. You could roll 100 times in a row, and this wouldn't be a dynamic deviation. This would be just like a static expected result, because theoretically you could roll 1 on a 2 side. Like if your dice only has 1s and 2s on it, if you roll 1 5 times, you can't sit there and say, oh, I'm bound to roll a 2. The nature of law says you are. But in reality, you could roll a 1 another 100 times, another 95 times, and it could be, and that wouldn't be an unexpected result, right? Like, so like a bell curve plays into what gambler's fallacy sees as, oh, I must hit. So that like the more 1s you roll, it's like, oh, you're getting closer and closer and closer to rolling a 2. But the reality is you're not. So like it even has, bell curve even has the way it works in our mind. It's just the way that a lot of things cycle. Surprised me that you said daily hard close could still fail to break. The 15-minute origin. I'm used to focusing too much on one time frame alone, but it makes sense. If you want 4, you can still add 2 and get it. Yeah, and this is like, we're starting to get into active level work. Like this would be like the introductions, like somebody jokingly said earlier. Anyways, this is like the beginning of the work into understanding what active levels are, which is we'll get into in the future, of course, but this would be like the beginning opening paragraphs of how you need to look at levels to understand where a level is active and non-active. But it completely should make sense. Again, it's total sense. Might not be common sense. It might not be so, oh, why didn't I see that? Well, because it was never explained to you. So this is like, again, one of these total sense things where it's like, okay, of course, because now you're looking at all your charts in the past and you're saying like, oh, there's so many times where I saw a 15-minute level. That wasn't the level because actually I missed it. So you'll go in your charts and you'll justify it like this. And you'll look at this and you'll say, the 4-hour level has to hold it up. And then you'll go back and you'll be like, okay, but there's also the hourly. It didn't hit the hourly, but it did hit the 4. Okay, so like, did it go like this? And then you'll go and you'll find it and you'll be like, oh, of course it was the 15-minute. Look, this one just kind of barely got touched, so now it's this one here. So it was actually just the 15-minute level. So now you be in this queue where you're like, oh, you mark the 4, and then you go after and you retroactively find out where it's justifiable and use like this retroactive, like it's kind of almost toxic in a way, because you'll mark a 4-hour and you're thinking you're learning. So you'll mark like a 4-hour level and you'll be like, okay, it has to hold this. Perfect. Oh, I was so right. Now it has to hold this 4-hour level. Well, in reality, it has to hold both. So you'd actually have to hold both. So if you started to hard close this down here in the 4-hour time frame, the move might not be dead. And so you're like retroactively going through the charts in a very toxic way, saying like, oh, and now you've justified the 15 when there's no real cue of backing behind it. Almost think of like the effect of time and how I explain it in Future of Trading Remastered. There's like there's a rule set with the effect of time that we use from forward to backward, top to bottom, or bottom to top, whichever direction you're going. There's like a rule set that things have to live in. So you're almost getting into like this toxic relationship with the charts, and maybe kind of like what I see is experiencing a little bit, saying that this is just a guess. I'm not, saying this is a certainty I see, but maybe this is where something that you, like a lot of people, not only you, but you're the example today because you mentioned it, might be saying like, oh, I've been doing this for a long time, but I'm still having troubles. Well, you might have a toxic relationship with the data where you've marked this as a 4-hour level and you think you're doing things right, which by the way, you are, but there's a deeper way we can do these things, right? You might have a 4-hour level here and you might be in the charts like this and be like, oh, I took the perfect trade, right? And then all of a sudden it goes down to the 15. And then you're like, I'm still in a trade, but how could I have gotten better? So maybe you're in a positive trade. Maybe you're actually making money on this trade even yet. And then you go here and you're like, oh, of course, I missed the 15. This is like a toxic way to do things because in a way it's accurate because you're following that 15-minute trail, but it's one of X possibilities that could happen. So you could indeed hard close down here, and that would change the architecture of what you would expect. Now it has to hold the 15. So if the hard close hits here and hard close on the 4-hour, it then goes and holds the 15 and it starts to hard close at 15. It's showing you like the collapse of the move. It's saying I close the 4-hour, I close the 15-minute. It's showing you the collapse of the move, right? Now you can go here and say, well, there's also the hourly. Well, this is like the hourly reverse. So then you could get into an even further level of toxicity saying like, oh, of course I missed this. Of course, why did I buy the 4-hour when there was a 1-hour reverse? Alternatively, you would just always go to the reverses and you would say, oh, I'm just always going to be greedy and then miss out on like 8 out of 10 trades. So where's the balance, right? Like where does the balance lie here? Because there's no logic flow, because there's no understanding that there are multiple levels that can actually hold this thing. So you could be sitting on the 4-hour and then you could be hitting the 15-minute and bounce. And then you create this thing to yourself where you're saying like, oh, well, of course, here's the 15-minute. And then you'll always do this in the future and you'll never mark this level and you'll never mark this level. And now you'll just go like this and say, yep, here's the 15. There's the next 15. That's what I have to hold. Well, this may be true in some scenarios that that's the level might be a must hold level. Well, what if it was like this instead? Here's the 15-minute level. What if you went here and hard closed down here and you're like, oh, I'm losing the move. Oh, you're still laddering, haha. What if you just didn't close the 4-hour? What if it's actually just still testing this? So what if you thought this was the 15-minute that needed to close and you justified it as a ladder point? You may be completely wrong. And where this makes a difference is the ladder point is still in existence. Like this, the ladder point is still in existence. So you could sit here for the next 3 hours and just say, oh, I'm laddering. Meanwhile, what you're not understanding and you're not seeing is like, you're not laddering. You're actually hard closing the 4-hour. So what may look like a ladder all of a sudden collapses. And you're like, but we were laddering. Yes, but you missed the 4-hour close. You see? So people, they go in a circle. They're almost chasing their tails in a way because they are marking this level without seeing this. And they are marking this level without understanding that this can still hold it up. Or they're doing both of those while not understanding that there's still a trend there. So now you're getting into active levels, which is different than active trends, which is a different dissection of the way we look at information. But this is like how a toxic relationship is built with charting. Like I went through this many years ago where it was like this kind of process where I was like, okay, but why? Like, why is it doing that? Why does it keep going after these different levels? What seems like kind of this random chaos where I'm just, sometimes it's the 4, sometimes it's the 1, sometimes it's the 15. Well, there was a missing piece there, right? So that's important to see that, because otherwise you get stuck in this loop where you're just kind of like, sometimes it's the 4, sometimes it's the 1. And then you try to justify like a more, I don't want to say menial, but you're trying to justify singular pieces. You're hyper focused on the one piece when in reality, why can't it be like 3 or 4 levels and one of them is refusing to hard close, and that's giving the opportunity for price to go deeper? Maybe this 4-hour refuses to hard close because of timing reasons, and it forces it to go deeper and deeper until it goes up, and this candle here still isn't hard closed, which then creates this as a trend or this as a trend, like either one, whatever the distribution candle dictates. So then why couldn't it just create that? Because this refused to hard close, making this the controller of the move, right? So that's where like there's like maybe like a little bit of toxicity built in people. I don't know if toxicity is the right word, but for me, in my mind, it makes sense. Like it's a very negative relationship with the charts where we look at levels and we say, oh, and we're almost chasing our tails, because like that's like one of the number one things I see. It's like how often I see somebody in open chat say, oh, it hit the 15-minute level. It's not holding this level. It's dumping. It's like, you could just a quick look at the charts. It's like, oh, it's just the 4-hour level. And then the next person says, oh, well, I've got the 4-hour level. How come it's not holding? So you have both scenarios. And somebody is saying on like trader A in open chat is saying, well, the 15-minute level isn't holding and it's supposed to, so it's dumping. Meanwhile, it's the 4-hour. And trader B is saying, well, it's the 4 hours hard closing. And now it's not dumping. And they're both wrong, yet they're both right. But none of them is completely right, because it would have to actually live under the confines of both, where the 15-minute is closing and the 4 hours closing. So if you combine both of their theories together, it would work perfectly fine. It would be great. Then you'd have the 15-minute, you'd have the 4-hour, and it would be perfect. But, you know, therefore why I call it a toxic relationship, because too often people chase their tails in this understanding of the way the charts work. And they just create this trail of, oh, maybe it's the 1, maybe it's the 4, maybe it's the 15. And meanwhile, it's like all of them. Is it wise to do this on one time frame and stay there? Should we work at our story on multiple time frames? It seems like you go down in time frames. I go down in time frames to see the biggest, most important pieces. Some of these can negate the ideas formed on higher time frames. I always work down in time frames for this reason. Well, not just this reason. There's many reasons, but I mean, you need to see the strongest piece first. Anyways, the piece that could be what creates future moments, right? Like this daily could now be a future reverse. You need to see that stuff like on spot. You have to use multiple, because otherwise, unless you're experienced, you literally cannot see some of the pieces. I would agree. And even with experience, you can't be sure until you look multiple. Yeah, well, that's the thing. This creates a story of what could be possibly a future reverse, right? So you have to be aware of that. You have to be aware of that this move can now hold up the move as long as it's not hard closing to create new time frames, right? So you can't ignore any time frame. I think that's important to realize. Give more weight to the higher time frames. So you almost have to balance, like, I think there's a piece missing there when you say you give more weight to the higher time frames. I agree. But I also would add to that the word older. You also have to give larger weight to older information. So along with higher time frames, I think that term older should be treated the same as higher. Hopefully Cotton elaborates. Yeah, and that would be the two pieces. That would be like one of the missing pieces that a lot of people get is older. Like this right here, origin level. On what time frame? 4? Yep. 4-hour origin level. Important to know if we start dropping trend in the future. What if we drop trend here, go here, below, but hard close back above, right? Older is an important statement, and higher time frame is also an important statement. I've got some toxic habits that I need fixing and want the clearest path to fixing them. Yes, I think this is really important. Yes, exactly. I see. Perfect. Older time frames more important than newer, higher more important than lower. And so there's a very simple explanation as to why this can happen, because the older time frames can give you the larger events. Like if you were to go here and say, oh, well, this is like a weekly moments, like maybe you could find just now, this isn't going to be a weekly level, but let's say this right here, maybe it can be a daily. I don't want it to be the 4 hours, so I want to find, like, let's pretend this is the daily. Therefore, it should be more important than like a 4-hour level, right? Or in this case, this is the daily level that could hold the move up, should be more important than the 4-hour origin because it's a higher time frame. This is older, so it takes precedence, right? This is older, so it takes precedence, because the older the information, look at the size of the container it creates, versus younger the information, right? So I think this is a good understanding. Now, what if we did this daily? there a daily back here? Oops. Interesting. Now I have a daily break combined with an origin level. Anything else? That was a ladder point, so it's not this. Can't be an origin. Another ladder point. Okay, we might have found what could be a daily origin for the future. Okay, dude, man, here we go. See? Older, more relevant than this. So you may now get into a scenario where you hard close all the way down here and you're like, yeah, this move is cooked and fried. But then all of a sudden you come back and it's like, oh, it laddered off this move. No, it didn't close this and it confirmed it as an origin. Boom, boom. See? So that's where it's important, because you will miss information. You will simply just be like, oh, here's the 4-hour valley or break level or whatever you define it as, right? Like whatever it's definable as. Here's what could be the daily break level. Okay, and it was, and now it's creating it as an origin. Oh, it's laddering this part of the move. I don't think so. I'm pretty confident this looks like an origin to me. So you see what I mean about older information. Now, again, you get into a situation where you start hard closing the 4-hour down here, but the daily doesn't close. And now you're just like, well, what happened? Well, that's what happened. It's pretty fascinating how much charting has helped me build an imagination and be creative. It's cool, isn't it, Nemesis? There is, like, I said this for years on end. Give me a struggling music artist who lives on the street and plays guitar all day, and I will turn them into a pro faster than I'll turn a banker into a pro, because there is that level of creativity there. Like, love reading this comment. It's damn exhausting. It is. It's very exhausting on the mind. It's like it hurts your brain almost after a certain amount of time, and it's like, it's so crazy. That was a light bulb moment for me. Older information creates bigger information. So you can see how clear, like how so many people would get this mistake and being like, oh, this is the break level. It has to ladder off of this because this tested this. Now, as long as you hold, because now you'll just get into this trail of information that's toxic, because you're going to be banging yourself against, or banging your head, and you'll be like, oh, well, this is the reverse level. Well, what happened if it's the reverse level? It didn't dump. Just kidding. It was a false breakout dump. Haha, it actually laddered off here. Like, it will never end. There will always be the next piece that's justifiable. It will never end, because then this should have technically dumped the move, right? What about this? This is the break level. The break level was established before this hard closed the move. So you're already behind the 8 ball, because you're looking at this saying, oh, it can't hard close. So you'd be here in this moment, right here, and you'd be like, okay, can't hard close it daily. We're still good. It just deep dove. Still good. All of a sudden you'd be losing your hat, and you'd be like, oh my goodness, we're about to dump. And then it tries to dump. Meanwhile, if you saw that it was actually an origin level like a few candles before, you could sit there and say, well, what about this? Like, does this not like target the origin level? Like, could this not just be the rejection of the origin because it's laddering off of this? So now you could say like, okay, this is the hold level. Well, it can't target this because it's below the ladder point, but it could target the same level and stay above the ladder point, and then it could jump back over top of this, therefore creating it as an origin level. The older information will supersede it. And then it's like, well, okay, sweet, man, we got a good trade. And it's like, okay, well, yes, you've got a good trade because you use your technicals with this, right? Like, now you've got, 11%. Welcome to $30,000 or whatever, 25, a little over 25 grand if you're trading with that amount of money. Or you might be trading with more. You might be 50x on a huge amount of money. It might be some stupid like $75,000 position. So like older information. So like, this is a really good thing that I see brought up. Older time frames more important than newer, higher more important than lower, right? When he asked, what is the trick? More weight to higher time frames. Yes, but also age. Age is the same thing. We have 2 axes on the chart, up and down, left and right. This one creates age. This one creates time frames, right? So it's just like a really important thing to realize. So this is like all a part of logic flow. This is all a part of understanding, like, what can't you see? Now you look at this chart, I ask you the same question. What can you see? Do you now look at this completely differently than you did at the beginning of this lesson? Would you look at this now and be like, oh, wait a second, let's see what's actually happening here? Because a lot of the answers were very like one tone. Now, to be fair, they might be one tone answers because they're in a Discord message and somebody's not going to write this big long-winded paragraph, take them 5 minutes to write it. So to be fair, people may have seen parts of this, or maybe even all of it for some people. You're looking for quick ad libs in Discord, like just quick little pro quip answers. So again, to be fair, maybe people did see this, but now for most people, I would say, look at this now and what do you see? Right? So now you've opened your mind to what the logical flow of this chart can actually create. Now you've opened your mind to say, well, where are the possibilities? Now you can see them, or you can at least start to broaden what you thought were the possibilities from before, right? Music is still on, feels cozy. Need to get better at seeing origin creations in the moment. Yeah, this one wasn't too bad. This one wasn't too bad because it's like this, look. You don't, at this point, you're not sitting here saying, I'm going to long if this dumps, or I should say, you'd be looking for a long opportunity here, right? If you weren't in this trade yet. If you're already in this trade, maybe you would be taking profits. Maybe once this hard closes, like maybe you take profits up here and you're already on your second round. So if you're not in this trade, you would look at this and you would say, like, take all this other stuff away, clear up your chart a bit. You would say, okay, if this can create the origin level, because it just tested it, if we're going to move up, where would I long? And then it becomes very easy to go like this and just go to the previous range and be like, here's a break level. Well, obviously this is in a completely different origin level, completely different move. So this doesn't even fall under this range. So this is completely out of the question. So all the bottom sides of these candles are out of the question. This is also out of the question because it breaks this ladder point. So no longer are you under the confines of ladder to ladder to ladder, wherever this thing ladders, right? Like, so this is out of the question, and the bottom of this is out of the question. So if you can't even hit the bottom of this, at a very maximum, you could hit the bottom of this and retest whatever local time frame could be found right in here. So this would be like the absolute maximum, which wouldn't, I don't think, like, this wouldn't constitute as an origin level. I don't even think you could justify it. You couldn't justify it as an origin level. So logically speaking now, if we were to say we're laddering from here to the next piece, if this is holding up, what could you go after? You have two options. You can go after trend, or you could go after this same level right here, which actually would just exist right here. So you have now two options. You have trend in this. So if you are going to create this as an origin level, which will reverse the move in the other way, which level can you go after? And there you go. There it is. It's like perfect. There's no real possibilities left once you understand that, hey, this could be an origin level. There's nothing left there to test. There's one moment that confirms that it's being an origin. So this will now control the future of Bitcoin's uptrend. So if you break this, then you're going to have a massive move down. So this is where I would say, what were the possibilities here? Well, there really was only one possibility. If you're going to hold this range and move up, like if you were going to long, this is the deepest level. Like there's nothing else that could even work. I don't know, maybe you have like a 1 minute time frame off this wick. That would be pretty tough to justify when you just can just say, oh, it could simply just ladder the move. It could simply just hit this level again and ladder the move. Like, okay, fine, let's try to go justify like some ridiculous time frame. I don't even know if you could. I don't even know if we can get that far back. Well, there's like this, which already got tested. So maybe you could go like this. Maybe. I don't know. This feels a little silly to be buying a 5 minute level here. There's no 3 minute levels. Is there like a 1 minute level? I don't even know if we can. I don't think we can get to that. God damn it. Even at a 5 minute level, why would you take that 5 minute level if your origin is right here If you've already tested this, why in what world would you say, oh, it's dumping from 551 to 360 in a moment when you have a trend there and when you have this level? Like, why? It just feels sloppy. It just feels like a really poor position when you're sitting here and you're looking at this and you're saying, where's the quality of my position? Yeah, I'm just gonna go right here. Like, I would almost say, like, let it deep dive almost. I would almost rather take a trade here and risk missing it completely. Like, this will miss the trade, right? Yeah, just misses the trade. I would almost just like rather take a trade here and miss the trade than be up this high. Like, this just feels so stupid. It's such a poor quality position when there's such a better decision to be made, when you could just even this is a better decision, even that it missed the chart. I wouldn't even care about that. I would actually pat someone on the back for taking this spot and missing the trade rather than being in profits. Like, if they took this trade here and they were still in because they were on 50x, I would pat someone on the back for this. And if they were here, I'd be like, dude, you entered, like, I'm happy you're in profits, but man, you entered so high, dude or dudettes. You, like, this is crazy how high you entered. I'm glad it worked out, but be careful in the future because that's like really crazy. You see what I mean? Like, the quality of position is just so, yeah, okay. Maybe if price was up here, and you're like, oh, it can dive down to this target, this is fine. And you miss your trade again, but then to go and take this trade after it's already tested this, it's just so odd. Why would you do that when you could simply just go for this here, which just follows the ladder point? Or you could forget it, just go to the ladder point, just like float it somewhere. Yeah, as long as it stays above this, perfect. You probably miss it because you probably floated a little closer, but like, at least they're better decisions. Like, at least they're more thought out. And then it's like, well, no wonder it holds the move. Like, look at it. It's like the perfect point to take a long. Like, of course it's going to hold this move. So this is a really good example of, like, older is also, like, yes, a higher time frame is equivalent to older in existence, right? So if you're targeting this in this moment, sure, that's a great local target. If you're dumping like crazy, maybe you want to look at more of like a legacy target, right? Oh, music is still on. I guess I should turn it off, right? Sorry, guys. Guys and girls, I completely forgot to turn it off. Quick in Discord is true. Yes, my mind feels expanded. Obviously need to keep working on this logic flow. Yeah, it's so important to, this is such an important lesson today. Dumping like a crazy. Yeah, you like that one? Yes, it helps seeing you go through the move through that again. Thank you. I remember you said in an FLT at one point, origins can be created wherever you have a level in the past. The break that is strong enough to reject the breakout. And in this case, that level is justified by the theory of the ladder. Yeah, and again, that's exactly it. It's like about making that quality decision on the charts. Like, if your decisions are always this thought out, like, imagine every single trade you ever take, you talk about it for, like, let's create a scenario. Every single trade you take for the next 2 weeks, you do self-talk and talk it through in the group channel with the guys. Don't do self-talk. Jump in the live trading channel and just go in front of a group of people and just talk about it for an hour and just work through it. Just don't take a trade until you take your cell phone and you put a timer on it for 60 or 90 minutes. And before you can ever take a trade, you sit there and talk about it. I don't even care if it's a scalp. Oh, but I'll miss the scalp. Oh, I guess you missed the scalp. And then you should be talking for the next 60 to 90 minutes about the next scalp after that could potentially develop. Talk about every single trade, this in depth, for 90 minutes before you ever take a single trade. And if it makes your brain hurt and so to the point where you feel like you're melting, fine. But imagine the quality of trade that you would get into every single time. If you went to this length to talk about it, to discuss it, to think about it, to calculate it like you're Dexter on the charts, to be this calculated on the charts, to be this, like, Dexter never gets caught because of how calculated he is. Well, we can also never get caught, but like, put a timer on yourself and talk about this one scenario. Talk about your next trade for 60 minutes and see how many errors you make. That would be a good challenge for people. You guys feel free to do that. That would be a great challenge for people, right? Like, imagine how much mistakes you would remove off your charts if you did that every single trade. Now, I'm not saying I do that every single trade, but my mind works very fast after doing this for over 10 years now. My mind works very, very, very quickly. Now, you could go all the way down to the hourly or the 4 hour. I don't necessarily know if I'd go down to the 5 minute and
Like the 15-minute, maybe the last time frame I'd go to here, being that it's a daily candle. But if I was doing this on a 4-hour,
don't worry that we've only gotten through 1 minute of this. More importantly is the actual lesson that we're talking about today. I have to say, I like this talk about it for a while idea. That's partly why my position trades are usually good. I have a lot of time to think about them and revisit them. Yeah, imagine the amount of error you'll reduce in your charting and the quality of positions, because I just go back to that. Imagine, think of how quality this position is right here. Think about how good of a quality of a position that is, where you've hit an origin level, like justifiably. Could you create an origin off this? Yep. Does it also hit trend that's been there forever? Yep. Is it laddering the move? Yep. Is it the final hold level that's a reverse that can hold it with nothing left there? Yep. Is there any time frames lower that could hold it? Nope. There's nothing left. So literally, don't you just go through this whole entire hour-long process to check every single box? Like almost like you're doing like a shipping manifest for an entire cargo ship. And you're like, okay, are all the containers sealed? Yes. Are they all locked? Yes. Are they all secured with chains? Yes. Do I have all the manifests? Yes. Do I have all the shipping logs? Yes. Do I have all the designations? Yes. Okay, we're in for a smooth ride, boys. Let's go. Right? Same thing. It's like, imagine going through that length. And on all the check boxes you hit, does this make for a good trade? Yeah, it looks pretty good. It's just like a well thought out quality position. How can you beat that? Right? Dexter was an amazing analogy, by the way. Yeah, Dexter is so calculated. It's just like the amount of calculation that goes into things. It can just be the reason why you get caught in a bad trade or don't get caught. After all, we're risking more money than people make in weeks sometimes. Might as well do something good, some good thinking about it. Yeah, I mean, that's what I would implore. Like, so this is what we're going to be doing on Wednesday. We're going to be doing high level logic flow analysis for the leak finding session.